I'm just gonna quickly explain about three trades. Uh, three trades that I took. Nice winning trades. Let me look for it. So the first trade I took, let me just do this quickly. The first trade I took was when, hold on, let me look for it. It wasn't this one, ignore that. Shit, where was it? I'm actually trying to remember for you guys. I can't remember what the trade I took was. Oh, that's where it is. Okay. So the first trade I took was basically simply gold right here. 5-minute time frame is trending pretty nicely. I liked it. Let me actually go replay. I liked this trade today. I liked it. Price pulled back into my area of confluence. I hopped on the 1-minute time frame. I'm looking for some break of some change of structure. I see price make a lower low, lower high, higher low, higher high. But that's not all I can see. My entry was actually based off. So because this is the because this is the previous high, because this was what made price push here. Price pull back into this area. I made it push down here to make this low. As you can see, candle close below this wick. So make price make a higher high and then a higher low. What do you also call that? You also call that indication. Correction is the pullback right here. Continuation is around here. So obviously your entries should be above this level, somewhere around here, leaving your stops around there. But for me, I actually entered somewhere above around here, and I was targeting these highs. Now, hold on, let me just show you the whole trade and then I'll explain to you what happened. I'll explain to you everything I did and shit. So, basically, what happened was that I entered the trade on the 5-minute time frame. I mean, on the 1-minute time frame. And then I was on the 1-minute time frame and I was just looking at price. And if I'm being honest, I left the trade. Like, I left the trade because I saw a change of structure right here. And personally, in my opinion, I was wrong to leave the trade at this point. If I was to leave the trade, I wouldn't want to see it break this low. Not this low. I wouldn't want to see it break this low right here. Because price then made higher high, higher low, higher high, higher low. Higher high. But this is the previous low. So if I saw price broke this low, I'll be like, okay, fair play, then definitely wants to go down. But clearly we didn't see that. I mean, candle closed below this low. We didn't see that, did we? But yeah, I left this trade around here when I saw that price didn't want to close, when I saw that price close below this low. So I left that trade around there. It would have been a nice, what, if I held this trade, it would have been a nice 7 to 1 risk to reward in one day. But you get me, I just didn't like that price. I felt like I should have waited for price to kind of close below here, but I was just quick. But I actually had a re-entry because I was looking for, I still believe that price wanted to go up. So I was looking for a re-entry, and my re-entry was around here. Because at this point, even though price didn't trend, it kind of close below here. Price made a lower low. Like it's mini swings and stuff like that, but this is the most recent lower high. Because it's all sideways movement, but this is the most recent lower high. And basically we can see that price created an indication correction. Like I said, price indicated from here, corrected right here, and then my entry was basically around, let me see, my entry was basically around here, I think, somewhere around these two levels. When I saw price start pushing up, that was my entry. I was targeting this, I mean, I was targeting everything for me, this whole swing to the upside, trying to catch it, but where did it go? I was targeting that whole thing, and price did hit my TP1, but then after pricing my TP1, I got stopped out for break even. So that was the first trade. Those were the trades I took, and the first trade I actually took, the one where my edge was here, it would have actually been a profitable trade, but unfortunately I left the trade in it because I just saw, I don't know what I was doing, bro. But I actually redeemed myself again from here. Now I'm gonna delete this. What? When did I draw this, bro? What? Now we see price was trending on the 5-minute time frame, but I felt like price was digging a bit too deep off the SMAs, but it was still pushing higher. This was where I was at, by the way. Now we're going to talk about this here. So I felt like price was still pushing upwards from the SMAs. It was still pushing upwards. It was still trending upwards. So I felt like the 5-minute time frame wasn't the time frame for the SMAs anymore. So I was like, what is it? The 15-minute time frame. But as you can see, the SMAs the price is nowhere near the SMAs in the 15-minute time frame. So I was like, okay, how about the 10-minute time frame? So let's open the 10-minute. And as you can see on the 10-minute time frame, price nicely touched the SMAs, pushed up, touched the SMAs here, pushed up. So I was basically looking for another push up around this area. So this area that I drew has Fibonacci, it has a previous swing high, and it has the SMAs in order and everything. And as another confirmation, we can see price create a indication correction, and we're now waiting for the continuation. We're up on the 1-minute time frame for an entry, and my entry was basically looking for an indication correction continuation. So we can see price make a lower low, lower high, lower low, lower high. Wait, is this still a lower high? Let me just check the wicks. Yeah, so lower high, higher low, and then let's see, you can see that price made a higher high because price passed, let me delete this, price passed this wick, so price made a lower low, lower high, lower low, lower high, higher low, higher high. Now that's the indication when price created a high high. This is the correction, and anywhere where price goes above this level, this green, let me make it a bit thicker, this green line, anywhere price goes above that, I'm safe to look for buys. So price started going above there, and my entry was somewhere around here, leaving my stops down here, and then I was targeting on the 10-minute time frame. You can see the nice trend. I was targeting these highs. Price actually hit my TP1. I took 50% of profit, and I was then, after taking 50% of profit, I was targeting TP2 with my stop loss to break even. Boom, I got stopped for break even, and then price hit my TP2. Imagine that. But yeah, those were the trades I took today. But it's just unfortunate that let me find it real quick. It's just unfortunate that this trade right here, it's just unfortunate. Hold on. It's just unfortunate that this trade right here that I took, it did actually hit my targets though. But those were the two trades that I took today. Hit my break even twice for both of them, as I showed you, and then we're gonna hop on a one more trade, which was like two, I think it was last week, yeah, somewhere around last week. Card JPY sell set up. Let's just go back a little bit. Hop on the 15-minute time frame. Okay, let me just mention to you guys. I've started to use, so basically depending on my setup chart, I use the two entry time frames before it. So basically, if my setup's on a 1 hour time frame, the 15-minute or the 5-minute will be my entry. So between those two can be my entry. If I'm using the 4 hour time frame, the 1 hour or the 15-minute can be my entry. If I'm using the 15 or 30-minute time frame, the 5-minute or the 1 minute can be my entry. So like stuff like that. So this is the 15-minute time frame. Let's go to the trade real quick. Price slaps our area of confluence, so we're up in the 5-minute time frame. In the 5-minute time frame, we can't really see structure that much. We can't really see structure. On the 1-minute time frame, you can see the higher highs and higher lows more. You get me? You can see these lows here, you can see those lows there. So you can see right there that price made a higher high, higher low, equal highs, and then a lower low. This right here is an indication. Let me just delete this. That right there is an indication. This is the correction. So the whole move up now is price correcting itself. So let me just, price comes into our zone, still correcting itself. Price doesn't break the previous high. It makes a new practically makes a new high, and then once price comes underneath this level, we're safe to look for sells. As you can see, price came up below this level. Entries around here, stop loss at right here. You can see an indication, correction, continuation as entry. Just for another confirmation, we can see a higher time frame. A higher time frame indication of this swing low, indication, correction, and then continuation. And then we see on the 1 minute time frame when price finishes its correction and starts changing structure and stuff like that. And then we see the indication, correction, continuation. And then when I saw price when you see price just burst below the level, you don't need to wait for a candle close. You can just start selling, and then stop loss is right here, and targeting these lows. The first target is the 5-minute, actually sorry, the 15-minute right here. So your TP1 is right here, and then your TP2 is right here. Targeting these two, and yeah, you see that price nicely played out. Boom, nicely played out. Would have made an 8-to-1 risk reward in one day. Imagine that, 8-to-1 risk reward in one day. Beautiful. So that's all I really have to say. Those are all the trades that's been taken, and yeah, that's all I really wanted to talk about. I'm starting to use ICC, indication, correction, and continuation. I'm starting to use that as my entries now because I feel like it's more better, safer, understandable, stuff like that. That's how I feel like. I feel like ICC is just like beautiful in it. It's just good. You get me? Like what I used to do is like it's more like I feel like it's more safer. You get me? It's more like showing that price is on a downtrend. because technically my entries from what I used to do, my entries would be on this candle close, and my stop loss will be all the way here, and I'll be targeting the lows. And I wouldn't have been stopped out, but I feel like ICC is more risk to reward, more profitable. Actually, no, I would even be, if I wasn't using ICC, I would even be on a 1 minute time frame. I'd be on a 5 minute time frame. My entries would be down here, stop loss here, and it would have been like a 3 to 1. But you can see when I was using ICC, I'd be bagging like a 8 to 1 risk reward ratio. Like imagine that, almost a 9 to 1. Like imagine that. So yeah, that's how we want to talk about. We see tries change structure, pull back, make it lower high, and then boom, lower low, and then boom, momentum to the downside, momentum to the downside. How long has it been? It's been 60 minutes. Maybe I'll show one more example. But this wasn't a trade that this was a trade like a long time ago, like a long time ago. So let me just go and like replay real quick. I'll just show this trade just like one more time. It was a nice S&P 500 trade. It was actually a 15-minute time frame trade, because as you can see on the 3-minute time frame, it's not really. You can see boom, touch here, up. You get me? So I drew my fibs. Previous swing highs right here. You hop on the 5-minute time frame, 1-minute time frame, look for entries and shit. Like I said, you can't really see the swing highs properly in the 5 minutes, so let's open the 1 minute. Hold on, it's like a fly. I'm trying to kill this. I got it. So what can we see? We can see that price made a lower high right here, and then price made a lower low. What does that mean? That means if price breaches this high right here, then it's overall bullish. It's over. Actually, let me just adjust it. It's overall bullish. If price breaches this high right there, it's overall bullish. Lower high, lower high, lower low, lower high, higher low. Price decides to create this higher low right here. Now price creates a higher high. When we see price indicate, so this is indication. This candle was the correction, as you can see, it was the correction. And like I said, when you start seeing that green candle move, anything above this level is now buyers. The buyers have this level. Let me draw that properly. The buyers have that level. Anything above that level is buyers. Like I said, lower low, lower high, lower low, lower high, higher low, higher high, higher low. Indication, correction, and then your entries can basically be, in this case, I would have waited a little bit for it to push just a little bit higher, and then stop loss is right here, and then you're targeting the highs in it. You would have made like a 8 to 1 risk to reward. Boom. You can draw your trend line if you want to draw it. Yeah, down trend line if you want to draw it, and yeah, just nicely. Boom. Indication, correction, continuation. We made another 8 to 1 from this 50-minute time frame. Not only that, actually, to be fair, you can't really see it, can you? Yeah, you can't really see it, can you? Hold on, let's open the 1 minute. Yeah, I don't think you can really see it, to be fair. This was generally just an SMA type of thing. I mean, technically you can say price indicated from this level. You see this is a major swing high, indication, correction back into this level, and then continuation, simple as. So you actually forget what I said, you can see it. But yeah, that's all I really wanted to talk about. That's my new entry strategy. I like using the indication, correction, continuation now. And I've shown you all the trades I've taken today and how beautiful they look. And yeah, yeah. It seems that gold is now a 15-minute trend. So when it's about London session, when London kicks in, which is in like well, so it's 1 a.m. 1:45 right here, UK time, London time. So in about 7 hours, London kicks in. So yeah, bye bye.